everybody, it's Jessica Stone at Stansberry Research, and I've got Stansberry Newswire's Scott Garliss here to talk about why the sell-off is happening. We've been watching during the end of last week, the beginning of this week. We literally went from the highest highs of the year since the beginning of the coronavirus on the S&P and NASDAQ on Wednesday, and then everything plummeted Thursday, Friday, and Tuesday in trading. Now we're on the upswing the later part of the week, but still, you have some thoughts. You actually say the sell-off is good for the markets. Why do you say that?
Markets can't go up forever, or at least not in straight lines. So it's a healthy thing. Valuations get stretched sometimes. Pullbacks are good because that allows buyers to step back in that have been waiting to buy and have they've sat out when they're seeing these crazy moves higher.
You know, you talk about valuations, and there has been so much conversation in the financial news media about things being overvalued, especially these technology stocks. Do you agree with that? And how does the sell-off play into regulating them and trying to get them really to where they should be in terms of their value as companies?
Sure. So I look at the coronavirus as sort of one of the great accelerators of a lot of trends that have been going on. And so what it has really done is pushed our economy more toward this cloud-based economy. So I don't necessarily feel that valuations are crazy in technology stocks right now, especially if we're seeing the major shift going on that's going to be in place going forward. So people don't know how to value technology stocks at the moment. They don't know what the true revenue impact is going to be. And that's going to take time to show up. So rather than miss out, they're going to buy in, and they want to be part of that because that's where the growth opportunity is. And again, when you get pullbacks like this, you want to look for good quality names to invest in. And you got to look at where the ball is going, not where it is or where it's been. And the ball moving forward is going to be in technology. So you want to be looking at good quality names like Amazon, Apple, Microsoft, Google, Facebook, because they are going to see more and more business opportunities going forward.
So then what about buying in now? Is now a good time to get in? Is it worth waiting a little bit longer to maybe get a better deal? And how do retail investors and those of us making our own trades need to think about this? Because it has been a wild ride. We've seen a lot of volatility. And in order to build up our retirement or our kids' trading, school savings funds, we do want to make money.
Yeah. So there's a rule I learned a long time ago on Wall Street, and it still applies. Like if you want to buy something, you're really convicted in the name, you should at least take a half a position, and then you can wait with that other half of the money. If a pullback opportunity like this comes, that's the time you can step in and buy more and get a full position on. But what you want to hold back on sometimes is rushing in too quick and spending all your money at once and be like, why did I do that? But yeah, I think pullbacks like this are great. I think there's a confluence of a couple of events going on too. One, we're getting closer to a potential coronavirus vaccine approval. Now, when that happens, what will happen there is emergency personnel, frontline people will get it first. There'll be a long time before regular people start to get the vaccine if it's approved. It wouldn't happen until at least the middle of next year. So that'll still be good stuff. There'll still be good trends in place for technology companies. But, as we get closer, it could let some of the air out of the bubble, because the thinking would be they've all benefited from not having a vaccine and people being from home. If we get a vaccine, people go back to work. The other big thing going on is September is typically the worst month for the stock market. On average,
we talked a lot about this. When you show me the charts, it's literally a V. It's like this nice big up line until September, and then it's...
Yeah. September on average since 1928, the S&P has lost 1%. But then if you look forward in terms of a non-calendar year, the best 3 months of the year happen to be November, December, January. I want to say the market average return is about 3.3%. So for investors, they should be looking at this saying, hey, this is typically the best time of year to buy stocks because this is when we have the biggest pullback. And then the growth cycle keeps going forward. And the fourth quarter into the early first quarter is probably the best time to invest.
When the market started pulling back last week, there was a lot of conversation around what would Robinhood investors, these new day traders who were new to the markets and had been told by the likes of Dave Portnoy, a Barstool, that, hey, you know, all you have to do is invest in technology and it's going to go up, up, and away. Well, obviously, with the tech sell-off we've seen, that didn't happen. How much of a factor are these sort of novice investors in these swings? And should we have some compassion for them?
We should definitely have compassion for them. You know, I think what they're finding out is you're probably getting some people that are new to investing and doing investing on their own versus, say, doing it through their retirement plan at work. And they're trying to get more of an opportunity to grab a little bit for themselves. Totally respect that, understand that. I encourage that. It's a learning lesson. It's just, instead of shooting in the dark or throwing a dart at a dartboard, this is why you want to use, say, a service that picks out the weed from the chaff and helps you understand good companies from not so great companies. And it helps you pick the winners from losers. And that way it makes the investing process smoother, and it gives you a game plan on how to do this instead of just taking a random shot and hoping you're right.
And I have a feeling those of you who work at Stansberry Research might want to help people do that better, not just at the Newswire, but also in the broader company. Thanks so much for that soft pitch there. Appreciate it. And if you want to get connected direct to Stansberry Newswire, just hover on your screen. We'll take you right to it. Plus, you can always find us on YouTube, Facebook, Instagram, LinkedIn, and Twitter. That's all for now. Thanks for watching.